Welcome everyone again to our Hidden Gems webinar. Thank you again for your time. Now our partner in this is Chapter 1 Advisors. They are an IR and PR company, so they help us source companies for these webinars. So if you receive an email from them, please understand they're one of our partners. They've been a fantastic contributor to these webinars. Also, we've got a survey out at the moment, a ShareCafe survey. We want to know what you want, what you like, what we can offer you in the future. It helps us get a better understanding of what works, and it ensures that we can continue to provide a free publication to our audience. Now, we also have some research reports available in the coming weeks. We've established a research company called Corporate Connect Research. We've put together some highly experienced analysts, and we will put out research reports on some of the companies that have been listed on our webinars previously. So watch out for that. That'll be free for ShareCafe registered members. Now, some quick facts about the market. Saw a really interesting chart this morning on the market cap value of the S&P 500, which showed the top 5 stocks have contributed a $1.66 trillion increase in the value of the S&P 500. The other 495 stocks have lost an estimated 1.61 trillion. So if you think the market's going up, you need to dive into the numbers. They're not always as they seem. Now in Australia, of course, the market's awash with liquidity at the moment. Liquidity is chasing growth. People are getting government handouts. People are redeeming superannuation accounts early. Income-seeking investors are moving out on term deposits into the markets. The central banks are flooding global economies with cash. And of course, you're seeing some ASX companies taking advantage of this liquidity of active investors looking for returns. According to the ASX, in June 2020, companies alone raised $9.5 billion, a 72% rise in the previous corresponding period. So for those of us who have got a little bit of market experience, we need to emphasise that investors need to do their own research. They need to take time in understanding where they're investing, and that is the very point of these webinars. Today we are focusing on resources, a very good place to have been invested in over the last 5 years. If you look at the S&P ASX 300 metal and mining benchmark, it's returned around 15% over the last 5 years. Today, we are looking outside of that benchmark to some of the smaller companies with gold and or metals exposure. First up, we have Apollo Consolidated, ASX code AOP. It's a Western Australian-based gold exploration company focusing on a portfolio of tenements led by the Lake Rebecca Gold Project. It has a market cap of around 100 million. We have with us the CEO, Nick Castleton. The stock's returned around 60% for the last 12 months. Nick, over to you. Thank you.
Thanks, guys, and thanks for the opportunity to tell the market a little bit about the Apollo story. We're a little bit unusual in that we found a million ounces in maiden resources just outside of Kalgoorlie in an area that was previously unmined and underexplored, and Kalgoorlie is a prolific district, but it's quite mature and it's quite hard to find completely fresh mineralizing systems. And because of that, you can see on the share price chart there on the screen, we've had a pretty good run up since our first discovery hole way back in 2017. Literally the first diamond hole we put into a target we'd had on the books for some time. It was something like 47 meters at 4 grams. It's some of the prettiest core I've ever seen, and we've been drilling to understand that structure and then finding additional structures ever since. And earlier this year, we got to the point where we had enough to deliver to the resource estimator, and he gave us a big number, and we gave that to the engineers, and they gave us some pit constrained ounces and reported just a touch over 1 million ounces at 1.2 grams as a first off. So it's been a good journey for us. Obviously, COVID set everyone on their heels a bit, but we've recovered strongly since then with the gold price and sentiment. Currently, we're about $100 million company. We've got $20 million in the bank, which is a nice place to be. And we've done a fair bit of that without being too dilutive. And that's by selling some of our leftover assets in Côte d'Ivoire. Very loyal shareholder base. Most of these guys are high net worth investors in retail. They've been with us since we're exploring in Africa and obviously have stayed with us and contributed for the Australian discovery. Lake Rebecca, changed everything for us, and we've been divesting Côte d'Ivoire since, which has helped us. About 20% institutional at the minute, but we'll grow that because I think we're probably going to morph to a development story over the journey. I'm an explorer, been doing it for a long time. We're joined more recently by Tony James, who's a mine builder, a mining engineer out of Kalgoorlie, literally knows everyone. And he can, he's chomping at the bit to put the right people behind this and start talking to how we get ounces out of the ground. We've got an enterprise value of about $80 odd for our resource ounces. We think it's actually a bit less than that, and I'll talk you through some of the hidden value in a later slide. If we can move on to the next one, please. Location-wise, it's a good spot. We're 150 kilometres from Kalgoorlie by road. It's a good road as well. It's actually the construction road for the Tropicana gold mine. So heavy haulage transport, easy get, it's about 2.5 hour drive. The location at the southern end of what's called the Laverton tectonic zone is a good spot as well. It's where mineralized structures to the north of us have, you can see there's more than 30 million ounces of endowment. We've got, added 1 million to that list, but way down in the southern end where the structures go into granite country, which is those white rocks. And so it makes it a bit unusual. It's a strange host rock, but that's the risk is the reward. It was underexplored and underdone, and I'll show you a bit more about that in the next slide. Now, what we did, like I said, we took a block model that was given to us by the resource geologist, gave it to the engineer. We only talk about ounces that fell inside pit shells at Australian $2,250 an ounce. And you can go to and forth on what's the correct gold price to use on this sort of work. But since we did the study, Aussie gold's up is $550 higher than that number that we use. So it's become conservative. But it's a number. But what's important is we don't talk about ounces that didn't fall inside those commercial shells. So we use standard mining costs, and the engineers told us what's mineable. So they're literally chomping the bit to start mining. The reason we didn't is we saw that in a lot of places that I'll demonstrate that the drilling, the pits dug to the basin information, which means it can get bigger, and we need to continue on with the drill work for this calendar year. 3 deposits. But the big breakthrough for us was finding the Rebecca deposit. And you can see that in the north of the tenement block there. Now that's under soil cover. It's got about 10 to 20 metres of transported profile on it. That kept it hidden. There was no real evidence that there was anything there prior to us. We did know about the Duke and Duchess gold systems to the south because they stuck out through soil cover and were found back in the 90s. But we followed the breadcrumbs north really, and we're lucky enough to find something that was firstly a lot bigger and also better. It's got a much better grade profile than what was known about previously. And I'll talk to that in the next slide. Yeah, thank you. So this is those grey shapes you're looking at there. They're long section views of the deposit. The engineers want to dig a big hole. It's 1.7 kilometres length. It's 0.5 kilometre wide. It's 300 metres deep. It's a pretty serious body of rock. And the reason it digs that much and that deep is because there's a lot of grade hidden inside that grey pit shell. And you can see in the bottom long section where, firstly you see a couple of things. There's areas where there's very little information below the pit because it dug to the last knowledge point. And you can see that where there is knowledge, there's blocks that go beyond the pit. So this is where we've been working with the rigs this year. Because of the grade inside the high grade structures, we did quite a bit of drilling in the lead up to the resources, and we've got over 500,000 of those ounces in indicated status. So they're high confidence ounces from the get-go. They're inside a shell. So it's coming along nicely. I want to really delve into what we've done since the resource work in February. So flip to the next slide, please. It's a really strange bit of geology. It's quite complicated, but what we've got is a series of structures that fold around themselves, and they're almost like sheaths on a like baseball mitt shapes, and there's multiple surfaces. What that does for us is it gives us in cross-section view multiple structures on the same section. And when you look at the block model, which is those colourful shapes there, against the edge of the pit shell, you can see that we're not talking about ridiculous ore to waste ratios, so it looks eminently open pittable, and we don't talk to strip ratios in the work we've done so far, but the numbers that we're seeing are a very stock standard goldfields open pit, so it's not a high strip system. And the reason that is because we get to see multiple structures in the same section, and we also get some low grade hanging wall and footwall material that adds volume. So next slide, please. This is just an animation. I'll spin it around just to show you back in February what we were dealing with. We only talk to the colours that sit inside the grey shell. Anything you see external to it, we don't report. And you can also see that the gaps in the knowledge base below that rotating model. So that's where we have been focusing our attention with the deeper drilling this year. And we've also been filling in some of the gaps at the north end and the south end and some of the saddle zones in the middle of these pits. So that's probably enough of that. You can click to the next slide, please. Now, firstly, on the diamond drilling at depth, we've had a diamond rig out there for most of this year. It's out there at present. We're putting pretty significant step down exploration holes below the system. There's 2 sections and 2 intercepts. They're 100 odd meters down dip from the last point of information, and you can see that we're getting grade and width in both of those, and that's a common theme. What it's telling us is the 700,000 ounces in a pit. There's also going to be a continuing storing as we go downwards below it, and I see great potential to add underground ounces here at a later point in the mine history. Next slide, please. This is as of today. These are pierce points in yellow that we've added since the resource work. You can see those strings that sit outside that grey shape. With diamond drilling, we're almost 100% success rate, drilling intercepts below the central part of that main pit. And then the intercepts that are in those yellow circles, that's RC drilling that's much closer to surface, and that will change the shape of the pit in the next resource work that we do. The sum of all of this is we're hopeful that we can build the scale of the Rebecca pit itself, either by deeper or laterally, and also we will increase the confidence of some of that remaining inferred ounces. Just as, in terms of scale, you forget how big this thing is. That's a 300 metre scale bar at the bottom. You can see that in a typical underground mining environment, that's about the strike of the long section that you'll be seeing. And so we're sort of dealing internal to the best part of the system with geometries that look like they can be mined later on as an underground setting. Next slide, please. The other way we can make it bigger is by pushing on to the other 2 deposits, the Duke and Duchess, which are to the south. They are much lower grade. They're really only 1 gram systems, but they've got just the same geometry. They're typically 15 metre wide mineralised structures. They've got, especially at Duchess, a strip ratio that appears to be very manageable. And we know that they're open-ended and there's just a limited amount of information in terms of drill density for both of those. So the rig's down at Duchess at the minute. This is the RC rig doing infill and extensional work. And it's also, and this is really exciting stuff, pushing further northwards along that structural corridor between Duchess and Rebecca. And you can see 3 stars that just emerged there and some intercepts that we'll be drilling. And these are literally reconnaissance RC traverses through transported profile. And we're identifying multiple areas that have got good grade and good geometry. And each one of these can provide us additional ounces. So the way we see this emerging over the journey is probably heading towards the million ounces of indicated ideally, and you can start talking to 10 years of approximately 100,000 ounces per annum mine life. It's a granite host rock, some photos of the core there. It's lovely ground conditions. It's very competent. The mineralisation is actually disseminated sulfides, not a quartz vein. The metallurgy on sulfides looks pretty good. So we're above the north of 90% in the work we've done so far. There's some free gold around. That's always a good sign. So there needs to be some gravity work and see how much comes out of that. Next slide, please. Now the hidden values. So this is the last of the remaining assets in Africa. Africa's been pretty good for us. We have got a royalty holding over the Segala gold project. There's more than 1 million ounces that are in resources there. It's owned by a TSX company called Roxgold. 1 million ounces, well into the 2 grams. It will be a mine. They're pushing on very hard with this thing. They think they're going to decide to mine it at some stage in the coming year. We can either ride the journey with them on this or we can liquidate that, but we do know from the strength of the offers we're getting that it's worth a lot of money. So we've got something else that can add to that 20 million cash balance. Next slide, please. So that's our story, guys. Thanks for listening. It's one of the few, arguably, next generation open pit discoveries in WA. We only report ounces that fall inside pits so that we believe they're real and mineable. We know it can get bigger because the drill rigs are telling this. We've got a metric against our peers that looks okay, and we know they've got plenty of funding in the bank and also up our sleeve in that royalty. So there'll be a lot of news flow over the next 6 months or so as we work towards our next resource statement. And then I think the story is probably going to be pushing on towards the development of this system. So it's getting a lot of support from the technical side. We run a pretty small and lean operation, but we're always happy to talk to new shareholders and answer any questions. So please forward any questions you may have. Thanks a lot.
Thanks, Nick. We have a couple of questions. I've actually been out to Kalgoorlie. I'm surprised you could find such a great maiden discovery so close to Kalgoorlie. Can you tell us about how the acquisition came about?
Yeah, the Duke and Duchess systems were present in 1990s exploration by a group called Aberfoyle. They knew there was gold there. They hadn't done the density of work to understand its geometry. So we picked it up quite cheaply off a junior. And I went there because of the unusual host rock and the disseminated sulfide. But it didn't look like a mine at that time because it was 0.5 gram to 1.5 grams. But the idea was that somewhere out there undercover there might be something better, and that's what we've been lucky enough to find. The Aberfoyle guys were only probably 20 or 30 RC holes away from finding it themselves.
And is the plan to use the cash to drill deeper? I mean, you've got some good grades there at shallow lengths. Are you going to drill deeper? We're
drilling deeper today. So we've got an RC rig doing the shallow stuff, and the diamond rigs putting in pierce points deeper below those grey pit shell shapes. So we're doing both. The quick value add is definitely RC drilling into near surface ore positions, and add to that, you know, what might be a you know, the mine life story that we'll be talking about in the next bottom half of this year and into next year.
Right, and just one last question: what's the time frame to development?
Well, there's lots of long lead times items such as environmental and MET and things like that. So we're putting our mind to that now, and we're doing that in the background. So, you know, if we can tick off some of the early stage approvals process and get granted mining license, et cetera, then this thing can be developed, you know, in the next 18 to 24 months. So that's, you know, something that we're increasingly putting our mind to.
Great. Okay, Nick, thank you for your time. That's all we have time for, but we'll make sure we follow up your story.
Thank you.
Next up, we have Artemis Limited, ASX code ADV. It has a market cap around $31 million. It's an exploration company focused on building a compelling gold resource at its 100% owned Pickle Lake gold project in Canada. We have with us the CEO, Rob Longley. Stocks returned around 366% this year. Rob, over to you. Thank you.
Yeah, I appreciate that. Thanks for giving us the opportunity to talk about Artemis Pickle Lake Gold Project in Ontario, Canada. And really exciting to hear Nick's story there. We hope to be talking along similar lines in the not too distant future when we start building bigger resources. The first slide I wanted to throw up was really just to quickly jump to the point of 3 good reasons to invest in Artemis. Artemis, as you can see there in the graph, has a vast exploration holding in northwest Ontario. All of the orange tenements you can see on the map there are Artemis tenements. And on those tenements, we have an existing JORC resource of 110,000 ounces at 4.3 grams per tonne at Casagiminus, which is the red diamond sort of in the middle of the diagram there. And we also have an exploration target there that we've worked on somewhere between 0.5 to 1.2 million ounces just at that one dot. So that's one deposit that we've got JORC resources on that is just one of 18 different prospects and deposits that I'll talk about further. We also have about 100,000 ounces, sorry, a bit quick for me there, out at Dorothy Dobie, which you can see up in the top left, which is a brownfields project alongside Barrick's Golden Patricia gold mine. And I'll talk a little bit about some of the gold mines that have existed in the Pickle Lake region over the last decades and the activity in the area. On that slide at the moment, you can see 2 really major companies working in the area. One is obviously Artemis doing the exploration work. And I think that the investors that we spoke to recently when we did a cap raise are really happy that people are really dedicating some money and some resources to this area. A lot of people have thought that it's been overlooked for a long time. Evolution, as most people would know, have picked up most of the Red Lake operations, about 150 k's to the left there, to our west. And in the Pickle Lake region, it's really Orteco, the Bellevue guys, which are really going hard at the Pickle Crow historical mine there. So you've got an Australian junior developing mine resources around an existing mine, and you've got Artemis with a great growth potential in the region. Next slide, please. That's a quick picture. As Nick mentioned, we've had a pretty good share price rise of the recent few weeks and months. But behind that, as with any story, there's a lot of hard work. So when I first joined May last year, we were sitting around 0.2, 0.3. So we've brought some joy to existing shareholders, and we believe there's a lot left to go in the story here. We're really just aggregating a gold exploration portfolio of value that is going to be able to deliver multi-million ounce deposits and really have the size and magnitude that true investors want in the long term. We've got a current share price around 1.3, 1.4, which gives us a market cap around 30 million. And our recent cap raise has topped up our cash balance to just over 5 million. So a really good position to be in to launch some drilling, which I can talk about in the next few slides. We've also got some international and domestic institutions now in our holding, 1832 being the most prominent with a cornerstone investment of 8.2. Next slide. A pretty small board, that's myself there along with our chairman Neil Hackett and Pauline Gately, our independent non-exec. And perhaps more importantly right at the moment is our exploration manager in Thunder Bay, Dan Grabiak, who's a very experienced exploration geologist, and he's working hard at the moment to get our drill rigs mobilised and all of our permitting through the various gates that you have in Canada. Next slide. That little map there shows sort of the Aussie invasion, which is a kind invasion or a collaboration between like-minded people, we think. Obviously, a lot of the producers have seen assets in North America, from Alaska with Northern Star, right through to Newcrest and St Barbara as well. And now the exploration companies are sort of picking up assets as well, which are a really good value proposition. Not to say Australia isn't, but there's some really good opportunities there. Artemis has been in Ontario for quite a few years. We've got lithium assets in there, which will lead well into the next presentation, more on lithium. We parked up our lithium assets for the time being. They're not costing us anything. And they're you can see 3 blue dots there in Ontario. They're our projects, lithium, but right in the middle, again, that red diamond is our Pickle Lake Gold Project, north of Thunder Bay in northwest Ontario. Next slide. That's a picture of the sort of greenstone belts, which unlike Western Australia, don't run north-south, they run east-west. So we're in the Uchi geological sub-province, which shares the sort of mineral endowment with Red Lake, which is quite well known. The other main area in Ontario for mining is the Timmins, Kirkland Lake, Sudbury area, more in the east. But in Ontario, it's a very mining proactive province. There's 20 operating mines there, and they produce 2 to 3 million ounces of gold per year. So our holdings in there include 664 square kilometres of gold tenure, and we also have just over 200 kilometres squared of lithium assets as well in Ontario. Next slide. That's a geological overlay of that Uchi greenstone belt that I talked about. Very similar, it's the same age as the West Australian Archean greenstone system. So for us as geologists, it's not easy to understand, but it's very comparable with our exploration techniques and the way we approach a systematic exploration. In grey there, you can see Artemis tenure holding. It's quite a vast, contiguous tenement land package, and that's important for a number of reasons. And on the left, you can see the gold production, gold bubble around Red Lake, which is a very active and currently operating, highly profitable gold mining region. There's no active gold mines actually operating in Pickle Lake. The most recent was Golden Patricia, which is a brownfields, we have brownfields prospects either side of that gold mine, and that was last operated in about 1998. So as I said before, a lot of investors are really happy that this area is now being looked at again, and with Orteco and us very active in the region, we think there's a good synergy there between a mine development and exploration acreage on the outskirts of that. Next slide. So just to run through those underground gold mines which were operated in Pickle Lake, the graphic on the right there shows the 4 underground mines that were at Pickle Lake. It's Donna Lake, Golden Patricia, Pickle Crow, and Central Patricia. So Orteco are doing the earn-in on the Pickle Crow mine, which went to just over 1 kilometre depth. Central Patricia went just a little bit deeper than that, so that was 1.2 kilometres. And on the far right, I've shown what's happening in Red Lake at the moment. That's the Koshinor mine, which is currently being developed actively to 2 kilometres. So the gold price is really driving these deep, high-grade lode systems to amazing depths once you've established a mining operation. On the far left is our Casagimas flagship deposit. And what I'm trying to illustrate there is at the moment, even though we've only got 110,000 ounces at 4.3 grams, that's only down to about 250 metres. Our exploration target is reasonably conservative to 500 metres, where we think we've got up to 1.2 million ounces in the ground. And Casagimas is a greenfields untouched deposit. So it's 100% Artemis, and it's all there in the ground to be discovered. But the real potential there probably is at depth. If these mineralised systems continue as the mines have, down to 500, 800 kilometre, then we've really got one big project just in Cassagiminis itself. Next slide. That's a plan view again of our holdings across Pickle Lake, and that's where we've got our 18 different prospects and deposits. Cassagiminis again is in the middle there in the dark purple. And I guess you can see the scale. From left to right there, you're talking about 100 kilometres east-west, and our holding spread sort of 35 to 40 kilometres north-south. So a massive package which is connected. All of our tenements are connected. But really what I've been doing is staking all the greenstone prospective area into one holding. Previously, Canadians have had bits and pieces of these prospects and done some work on them, which we're working through. But Cassagiminis is a classic starting point. It's close to our main road. It's in what we call our eastern hub. But the Dorothy Dobie and the trend around Golden Patricia is probably really what's got the institutions excited because of another deposit in the area at Great Bear Resources, which I'll talk about. So all of those holdings there are 100% Arden, except for what's in the middle there called the New Patricia Prospect, which is an earn-in arrangement, which we have, quite a cheap one, with really well-credentialed people in Xero. So that's where we've got our air mag being flown at the end of this month. So we've got plenty of areas to work on if we're held up with drilling, which is what's currently is the case because of COVID. Next slide, please. And as I said, we're breaking this up into Eastern Hub, which we can work from the Pickle Lake town, from the main road, reasonable access. And the Western and Southern Hubs are really, the Western Hub is predominantly a brownfields, really exciting area. And the Southern Hub is more greenfields, upside potential in that area, which hasn't really been worked. So we've got those sort of options and a lot of areas to work on as we move into the area and get better established. Next slide. So just coming back to Cassagiminis and our drill program, we recently put out a release as to why we've been delayed for a few weeks, and that's, I think, reasonably well explained in the press release. It is because of COVID and the measures which are in play there at the moment in Canada. First Nations are particularly vulnerable. The Mines Department has put a bit of a hold on refreshing exploration permits, so we're in the queue there. We hope that they start alphabetically with moving them through, because being able to obviously we're at the front of that queue. And Dan Gravy and our people on the ground in Thunder Bay are actively working to get us on the ground as quickly as possible. We've got drill rigs ready to roll once we're permitted. So the JORC resource in the middle there with the yellow bar shows you where we've got our existing JORC resource, which is quite a small section of quite a mineralised zone there. What we're going to do in summer is drill underneath that JORC resource. Now that we're better funded, we're going to do some deep holes to test that at depth. And we're also going to drill to the west, where we think previous drilling has missed an offset structurally. But really the big campaign is going to be in winter out on what is a lake, a shallow lake. Once that's frozen up and we can get rigs out easily onto the lake there to drill underneath, which is common practice in these parts of the world. Next slide. This is a long section looking north through the same Cassagiminis deposit. Again, sort of showing our summer drilling on the left there with the green blob and the blue blob, trying to expand our JORC resource from 110,000 ounces, which is a small part of it, to the west and at depth. And in the bottom right there, we're also showing that phase 3 drilling. And you can hardly see it, but on top of that phase 3 drilling is a blue line, which represents the lake. The lake is about 6 feet deep. It's quite easy to get through. And this is an underground, deep, mineralised high-grade system. So we're not looking at open pit excavation that will interrupt water flow. We're looking at deep drilling under there during the winter. Any drilling that we can't complete this summer will carry over into a bigger winter campaign. Last year at Pickle Lake, we hoped to get on the lake during winter. We didn't then have the MOU with the Mishkegoggaman. We now have that. So we're in a much better position to launch a big winter campaign. Next slide. A bit of a technical slide there for the buffs, but what I'm trying to show there with the blue rectangle in the middle is where we're drilling at Cass. It's quite a small part of a broader zone, and we've identified about 20 mineralisation targets just on Cass itself. I'll jump to we're working on that northern, just come back one if you can. We're working on the northern part of what is basically a dilation zone. What we do want to follow up in summer is a hit down at number 21 there, which is a very teasing 21 gram intersection over 4 metres, which has never been followed up. So we think there may well be a parallel zone there just at Cass. Okay, let's jump to the next slide. Everyone wants to see what are your best intersections. So what I've done there is on the right, just given a full list of all of our highest intersections, which run from bonanza grade over short intervals, 400 grams per tonne, right through to broader zones, which are more interesting from a mining point of view, put in context with the prospects. So that's our Western Hub, the brownfields around Dorothy Dobie. Next slide. Again, that's a geophysical overlay, just showing again, what's really important there in that Dorothy Dobie zone is what we call that Beerhead deformation zone. Having a really significant structure is really important to exploration, target and modelling. This is very similar to the situation which is happening at Great Bear Resources at their Dixie project, about 150 k's to our left. And so it's that system there that we really want to get on the ground after CAS and start some evaluation drilling through that area, because nobody's ever put that whole structure together before. We've got 30 to 40 k's of continuous mineralisation through there, and a historic mine which had 3 kilometres of underground development and poured out 600,000 ounces at 15 grams. So there's a pretty exciting prospect along the Dorothy Dobie trend, which runs into New Patricia and Esker. So there's a lot to do with there, and we're really excited about the prospects of getting on the ground and getting going there. Next slide. That's our news flow, which we've updated this week. So we hope shortly to announce mobilisation of drill rigs to CAS. We're running a detail, low level, very close to treetop airborne geophysics program over the New Patricia prospect, so that we can better target our drilling for next year at New Patricia. When the place opens up, we'll be conducting site visits and expanding our drill targeting out into other areas. So we hope to be doing a JORC resource update in the December quarter, and then in March we'll be providing news flow on a winter drill campaign, which will be much more substantial. I think that's about it, Tim. If we're getting the wind up on time, it's thanks for your time. We hope you got a bit of a quick picture over the Pickle Lake project and understand why an ASX junior is in Ontario.
Thanks, Rob. Time for probably 1 or 2 questions. I know some astute investors are quite excited about Ardennen. So with the capital you raised probably a couple of weeks back, if not a little bit longer, is the plan to use that capital to drill deeper? You showed that chart with some depth there. Is that part of the plan?
Yeah, it's a case of spreading ourselves carefully at depth and along strike. We'd like to, you get a few eggs in the basket. There's a South Limb prospects, which I didn't even mention, which is probably an all year round target next to the Donna Lake. So yes, now we're a bit better funded. We've got the ability to drill some sort of 4, 5, 6 plus 100-metre holes under the JORC resource to test, does this thing continue like every other deposit in the area? That won't necessarily add to the resource, but it'll demonstrate the depth potential, as well as getting to the other prospects, so that if one doesn't stack up or whatever, you've got another string to your bow. With Orteco probably getting a mine near mine development, you only need quite small satellite projects in this area to feed into those sort of places. So the economics about what's true value for investors, rather than just sit on one deposit and drill it for infinitum. It's really important for us to get across the whole package and do systematic exploration from geophysics, geochem, test drilling, as well as resource drilling, which is going to build the value into the company and give shareholder return.
And just one more question in regards to timeline. How are you impacted by the weather, and how are you impacted by COVID?
Well, COVID is the immediate impact. Toronto is still getting 100 cases a day. They're not out of the woods yet, but things are starting to free up. So COVID is obviously the major concern in this region, and we're lucky that we've got people on the ground there helping that are based there. In terms of the capital and the way we manage our expansion, we're going to do that systematically and sort of approach these things as a step-by-step basis. If CAS turns out to be a real humdinger at depth, we can throw a lot more resources at that and resource some of the other areas as well. South Limb, as I said, there's now an access road in there year round, so we could potentially get into South Limb, and that's right next to Donna Lake, and work that year round. Traditionally, people have done summer campaigns and winter campaigns. It's when those fringe seasons either side, which are a bit difficult. So CAS, for the time being, will be a summer and a winter campaign. But during the winter times, we're trying to build an all year access road into there so that we can work it year round if it really stacks up.
Great. Thanks for your time, Rob. That's all we have time for. We'll follow your story with interest.
Thanks, Tim. Appreciate it.
Thanks. Next up, we have European Metals. As the name suggests, we're off to the Czech Republic. European Metals Code EMH is a mineral exploration and development company focusing on advancing lithium and tin projects in the Czech Republic. It's got a market cap of around $46 million. We have with us the CEO, Keith Coghlan. Keith, over to you. Thank you.
Thanks, Tim. Thanks for the opportunity to present today. Thank you all for joining. Yes, I'd like to talk to you about Synovix, our world-class lithium resource in Europe. I know that battery metals and specifically lithium are not really flavour of the month right at the moment. Had a great run a couple of years ago now and a little quieter, but it will come again. The supply-demand equation for electric vehicles and batteries going forward is now undeniable. And nowhere in the world is this more evident than in the EU, the European Union, where we operate. There's been a significant amount of money and political commitment to building a European battery industry and to an electric vehicle future. And our project is very well placed to take advantage of this commitment. So I mentioned the project. Synovix is a world-class deposit. There's a couple of reasons behind that. Firstly, its size. It's a very, very large lithium resource, by far the largest hard rock lithium resource in the European Union. Our PFS has demonstrated that we can produce either of the main battery compounds, lithium carbonate or lithium hydroxide, in the bottom half of the global cost curve. We have the flexibility to produce either of those compounds or indeed both. Our location, I'll show you a map in a moment, but we're right in the middle of all the action that's currently happening in Europe. Within 500 miles of our deposit, there's about 6 million vehicles made every year. And clearly every year more and more of those vehicles are being made electric, so that the demand is only going to increase. And our strategic partnerships this year has been very important for us. The last 3 or 4 months, we have established 2 very significant partnerships. Firstly, with CEZ, which is the Czech national power company, 70% owned by the Czech government. They've become our project level partner about 3 months ago and injected 30 million euros into the project at that time. So the project is now funded through and until decision to construct in about 18 months' time. So very important, very good to have Ches on board. And just in the last week, we've announced a collaborative agreement with the European Union, an entity called EIT InnoEnergy, which is part of the EBA, the European Battery Alliance. And that's for the longer term financing requirements and potential offtake discussions. So basically our plan is to supply up to 25,000 tonnes per annum of battery grade lithium hydroxide, or the carbonate equivalent, into the European battery industry for many years to come. If you have a look at the next slide, just a rundown on Ches, our in-country partner that I mentioned earlier. Very large company, market capitalisation of about 12 or 13 billion. So a very strong financial partner. I won't read you all of this information that's there for you to see, but Ches are committed to renewable energy, committed to sustainable energy going forward, and building battery factories both in the Czech Republic and in surrounding countries as well. The next slide will show you, from a European Union point of view, the goals of the European Battery Alliance. A couple of quotes there from the EBA demonstrating how important they see building a battery industry and how important they see sourcing as much of the raw materials for this battery industry locally as they possibly can. One thing that COVID-19 has done over the last few months, it has really focused people's attention on local supply chains, and the EU is committed to trying to lessen their dependency in the future on Asia generally and on China in particular, the dependency for batteries and for raw materials. And this initiative is part of that. The EU announced only 2 weeks ago the largest green stimulus plan in history, 500 billion euros of expenditure to secure renewable energy going forward. And a large part of that is the establishment of this battery industry and providing the raw materials to that industry. The next slide, our partner in the collaborative agreement is EIT InnoEnergy, which effectively leads the EBA, leads the European Battery Alliance, and is the go-between, the commercial go-between the EU, the EBA, and companies and businesses within the region. And so the agreement effectively assists us in accelerating construction financing and the ultimate commercialisation of Sinovic. The quote at the bottom of this slide from Diego Pavia, the CEO of that entity, demonstrates how significant they see the Sinovic deposit in achieving their goals. And there's a couple of reasons why they see it as being so important. If we look at the next slide, as I mentioned earlier, the location of the project, the red dot in the middle there, completely surrounded by some of the world's largest and well-known, best-known car manufacturers, but also a huge number of battery manufacturers, both established groups, people like the Koreans, LG, Samsung, etc. Excuse me, but also some names that perhaps here in Australia we don't know quite so well, but significant battery manufacturers that are building a lot of battery capacity within the EU to deliver into this foreseen demand from the electric vehicle industry. If we look at the next slide, as I mentioned earlier, Sinovic is a very, very large hard rock lithium resource. If we took all of the known hard rock lithium resources in the EU, it accounts for about 65% of that total. So as I say, very important. The size is important from the point of view of delivering lithium into the industry there for many, many years to come. We modelled our PFS on a 21-year mine life, but that only accounts for about 9% of the overall resource. In reality, there's sufficient lithium in Sinovic to deliver into the European battery industry for in excess of 50 years. On to the next slide, please. Another reason why the EBA sees this as such an important project, the financial parameters of the project. We concluded a PFS just over 12 months ago now, the highlights of which are on this slide. As I say, a very large project with an NPV of over $1.1 billion US dollars after tax, and an after-tax IRR of nearly 29%. So the economics of the project are very strong. We can produce, as I said earlier, either battery-grade lithium hydroxide or battery-grade lithium carbonate in the bottom half of the global cost curve. Sinovic is a historic tin mine, and so we do get some credits from the production of tin, which is also very, very useful to us. We roll on, please. The key activities for our next 12 months, we are in definitive feasibility study stage, culminating in a bankable study in 16 to 18 months' time. Part of that will involve the FEED, the front-end engineering design contract as well, which is being let as we speak. There'll be some further drilling done on the project. This is not exploratory drilling, but confirmatory drilling to bring a larger part of the known resource up the JORC curve to assist with the debt financing. Our permitting and environmental impact assessments are all well and truly underway. These things are very important. Obviously in the EU, it's important to demonstrate very strong green credentials, and the project happily ticks all of those boxes. So the macro for us looks a lot like this. The EU has committed serious money and serious political wherewithal to the establishment of a European battery industry, and that is to deliver into what is expected to be a very, very large electric vehicle industry. For example, if we look at just Volkswagen and their plans, they have stated that they plan on building 3 million pure electric vehicles in 2025. So if we look at roughly how much lithium that might account for, it's about 40% of all of the lithium that was produced in the world last year. So, and that's just one company. Right next to them, we have Tesla building a gigafactory just out of Berlin. We all know of Tesla's ambitions and how many electric vehicles they plan on building. So the demand for batteries and the demand for lithium is going to grow significantly, and particularly in the EU. If we look at that against the supply equation, there is no battery-grade lithium produced in the EU currently, none whatsoever. So the EU has been historically the second largest importer of lithium in the world, and now they need to try and develop some of their own resources to rely less on imports from overseas. So having now established the basis for the European battery industry. The EU is committed to ensuring that it can deliver on that battery industry, and a large part of that is assisting in delivering the raw materials into the battery industry. And that's why the EIT has been established as the go-between to enact the EU's policy in this area, and why I think it sits very well for Synovets and the development of our project. So the EIT will assist us post the bankable document from a funding point of view, with talking to financiers, bankers within the European Union, the European Investment Bank themselves, for example, in securing the necessary debt finance to build the project. And there's also significant potential grant money available to us to assist in that funding equation. This is important, particularly from our point of view, a relatively small company, 45 million market cap, as Tim mentioned earlier, versus a commitment for our share of construction finance of about 250 million US dollars as it currently stands. So having, that's a large equation for any small mining company. So having the support of someone like EIT to assist us in finding large portions of the debt finance required is very, very important. Thank you. I think I've run my 10 minutes. Very happy to take any questions. This is an abbreviated version of our presentation. I'd invite you to visit the website to see the full presentation, and also our last couple of ASX announcements that detail those agreements I've been talking about. Thank you very much for your time.
Thanks, Keith. That's a fascinating story, and it sounds like you've kind of laid the political framework so that you can move forward. In regards to the lithium price and the car manufacturers making electric vehicles, when does the lithium price kind of balance out the demand that's coming in the future?
Well, the big swing up in production, according to the major manufacturers, will be about 24, 25. That's the very significant swing up. We know the lithium price has been down for the last year or so. A large part of that goes back to the supply that was secured a few years ago when the lithium price was so strong. And here in Western Australia, we know quite a bit about that, because WA became at that point in time the largest supplier of concentrate to the global markets for lithium from the spodumene deposits here in the West. Now, there's a couple of things about that. The vast majority of that spodumene concentrate can only be sold into China currently, because that's where the spodumene conversion facilities are. There are no existing or planned spodumene conversion facilities in Europe whatsoever. So none of that excess spodumene concentrate sitting here in WA can go to Europe currently. And if the spodumene con goes to China, it will remain in China. China doesn't export lithium. So we have, if you like, two markets emerging here. The spodumene con market, which is basically controlled by China, even in its current form, and what's happening in Europe and Europe's requirement to find vast quantities of lithium going forward to meet their demand in future years. Now, obviously, if you're going to start building a lot of batteries and a lot of EVs in 2024, you can't wait to 2024 to try and secure supply. It doesn't work like that, particularly for something like lithium, which is not LME traded. There's not a large secondary market. So the security of supply needs to happen now.
And did you say that there is actually no lithium development going on in Europe at all?
There's lithium development. There's no production of battery-grade lithium. So there's the slide I showed earlier shows you what known lithium resources there are in the EU, and they are at various different stages of development. If every one of those projects hit the market at full capacity, it's still nowhere near enough lithium to meet the demands just of the EU.
Right, and your partnership with SES, I think you pronounced it. Can you just explain that a little bit more?
Sure. So as I say, CEZ is the Czech national power utility. They've historically been a coal miner, and all of their energy historically was produced from coal-fired power stations. They, like the rest of the world, are moving away from coal, and they are very proactive in moving towards green energy. They're a part owner of the largest wind farm in Europe, for example. They have the largest number of electric vehicle charging stations in the Czech Republic, and they're rolling them out currently on a monthly basis. And they have aspirations to build battery factories, certainly one in the Czech Republic and one in a neighbouring country that have been already announced. There may obviously be more. So CHES became our project level partner about 3 months ago, injecting 30 million euros, about 50 million Australian dollars into the project. This, from our point of view, significantly de-risks the project. It means that we don't need to raise any more money until decision to construct. And at that point in time, I believe we'll have a very bankable project, particularly with the assistance of the EIT and the EU. So I think bringing CHES in and then bringing the EIT in the last week significantly de-risks Synovitz, and from my point of view means that the project will be built and we will go into production.
Thank you, Keith. That's all we have time for. I think that's a fascinating story, and probably a story that's not that well understood in the market, and perhaps their focus is just on the lithium price. But congratulations on securing such valuable partners.
Thanks, Tim. Thanks for your time.
Great, thank you. Finally, next up, we have Musgrave Minerals, ASX code MGV. It's a mineral exploration company applying modern day exploration techniques and models to prospective gold and base metal regions of Australia. It's got a market cap of around 356 million. We've got the CEO with us, Rob Waugh. There's a lot of talk about this stock given its 1 year return of 840%. Rob, over to you. Take it away.
Wonderful. Thanks, Tim. And thanks, David, for the opportunity as well. So Musgrave is, obviously we're progressing forward with our resource base. So a number of key points we have an existing resource of 600,000 ounces. The new Starlight discovery has grabbed everyone's attention. Obviously that's not in the current resource base. So that'll be new. The aim is to get that in the resource base later this year. So with White Light as well. So they're in 100% ground owned by Musgrave. We also have a joint venture with Evolution, which is significant. It's on the Salt Lake component of our ground. They're funding that as well. So there's another opportunity there we see going forward. We have lots of third-party mills in our district. And the analogue for us really is to find a Great Fingall. Great Fingall is about 6 deposits, making up that cluster of 2 million ounces at around 10 grams. So that's our goal and what we want to do going forward. So it's really to build that resource base at the moment, and that we can make a decision going forward about development. So just moving on to the next slide. As far as our corporate structure goes, we've got about 470 million shares on issue. We've got about 9 million in cash and another 2 million in liquid investments. So a reasonable market cap at the moment. But what we see with the Starlight discovery is the margin. Effectively, it's a fantastic margin because of the phenomenal grade and the near surface nature of the gold mineralisation. So we have had a change in over our register as well over the last 3 to 4 months. Another couple of significant holders coming in there and a number of gold funds coming in. So 1832 are now a substantial holder in us, and number of other funds, both North American, European and Australian, now hold positions in Musgrave. So also a couple of high net worths in West Minex Group, which is Jeff Albers, and Genesee, which is Charlie Harvey. And Evolution is another key component of our share registry. They hold 4%, and that's associated as well. And that came in about a year ago as far and linked to the joint venture. A key component of what we do is money in the ground. So we spend about 85% of our dollars in the ground. So we try and keep our administrative overheads very low. We think re-rate triggers for us going forward will be additional drilling at Starlight and looking for vertical continuity. So as we heard from Rob with Artemis, Yilgarn gold is similar, and there's significant vertical continuity to a lot of Yilgarn gold deposits. We're hoping to see the same at Starlight. We've only drilled at the moment to about 250, 300 metres, and we're looking forward to continuing to drill that at depth. So we can see our opportunity there as we continue to drill. Obviously resource growth, that is what we're leading towards. And then new discoveries. What the Starlight opportunity has brought to us is a possibility for repetition. So the orientation of that deposit is different to everything else we see in the belt, and that has meant we can turn the rigs around and continue to drill as we progress new exploration targets. Moving on to the next slide. So this really puts what we have in perspective as far as spatial awareness goes. So Lena deposit in the top left-hand corner of that image. Our break of day are the orange and red lines running in that northeasterly direction. And then Starlight, the purple line there, is cross-cutting it. So it's cross-cutting it at a high angle. We call it a link load. And then further to the south, we have the white light load. That is repetition, what we call a repetition of Starlight. So there's opportunity, and what we're showing with white light is opportunity for these repetitions in the belt. So there's a lot of work to go forward to do, but we think there's definitely opportunity to find more of those. Moving on to the next slide. The 3D, this is a 3D image, so it's just putting together what we were seeing before in a 3D perspective. And if you look at the slide on the right, you've got the twilight and velvet loads as part of break of day. This is also only looking at an area of about 500 metres of strike. And then the orange starlight load cross-cutting it, you can see from that image, and then the white light green load to the south. So this is what we're providing, is these opportunities to find new high-grade loads. And you can see some of the phenomenal grades we're getting at Starlight, including 77 metres at 13 grams, only about 7 metres below surface. And then the recent intercept we announced about a week ago, which was 14 metres at 190 grams, starting at about 4 metres below surface. So again, just moving on to the next slide. Hopefully we can do that and move through. The next slide is a couple of cross sections. Looking at Starlight, you can see some of the phenomenal grades we're seeing there. And again, just to reiterate, very close to surface. We're looking at about 2 metres of hard pan over the top of this. So hard pan is a transported cover sequence over the top of the deposit, and that's really meant that it hasn't been discovered before. And obviously that has prevented any surface expression. So that 2 metres of hard pan also makes it difficult to use geochemistry in an effective manner because of all the old workings around the area we're looking at. So we've got old workings only about 30 to 40 metres from the actual discovery, but are on a different orientation. They're on the main break of day trend in that northeast direction. So this is a virgin discovery. Just moving on to the next slide again. This is a long section. So a long section is in the vertical plane of the mineralisation at Starlight. You can see there's only a limited strike, but very high grade and some really solid widths near surface as well. So there's a little image there of some obviously very spectacular gold. That individual sample over a metre went 2,518 grams. So you can see how much gold there is in a very small area here, and that's what we talk about margins. So this is a deposit that can bring exceptional margins back with gold price at over 2,800 Australian, and you're talking about this gold only being a few metres below the surface. So the extraction costs are very low, which means that the margins are very high. We've got about 58 holes into this, RC holes into the Starlight deposit at the moment. We've got about 9 to 13 diamond holes. We've got further assays pending. We're expecting to get assays every 2 to 3 weeks. And again, we're just leading towards that resource. First resource update for Starlight, which will include with a break of day resource update in Q3. So the intent will be to continue drilling past that point, but that'll be an interim resource update. Just moving on to the next slide again. The white light discovery is about 75 metres south of Starlight. So white light, again, a parallel load system, and this is just showing this opportunity for repetitions within the belt. So when we turned the drill rig around to discover Starlight, it was the first time anyone had drilled in this orientation in the entire belt for 100 years. So some of the first operations were very small in this area, but they went all the way back to 1895. So we've obviously turned the rig around, made the new Starlight discovery, but that's opened up a whole new search space for us, which means we can test in this orientation for the entire 28 kilometres of belt. So again, white light, new discovery, 6 metres at 48 grams, no drilling below it. We're doing that at the moment and looking forward to results as they continue to flow through. Just moving on again to the next slide. This regional image just puts things again in perspective. So what we're seeing is Starlight, area there is a little insert, and then on a regional perspective, we're looking at gravity. So gravity is looking at the density of the rocks below the surface, where we see gravity lows, obviously low dense rocks. The red colours are the higher, more dense rocks, and we see breaks in the gravity. So breaks in continuity of the gravity is suggesting there might be a structure in some of these instances. So we're seeing that at twilight, at starlight and at white light. And where we see that, we're looking for repetitions of that in the belt. So we've picked up another 18 targets. We're looking forward to starting to drill test those over the coming weeks. We'll have a rig specifically on site to drill test some of these new targets starting in about a week's time. So that'll really confirm this theory about repetitions within the belt. We have the white light, we're looking for more of these type of repetitions. And that's the basis for building the resource from where we are now, through adding starlight, white light, and then continuing to add new discoveries as we make them over the next 6 to 12 months. This will be a 5,000 metre program on a regional sense, and in a week's time, we should have 4 rigs on site. So just moving on again to the next slide. So this is really putting it in perspective of what we're seeing as infrastructure in the region. There are 5 operating mills within our district, all within 120 kilometres. 2 are close, they're in 40 kilometres. And you can see the purple tenure there is Musgrave's tenure, and Break of Day and Lena where the new starlight discovery is. So there's lots of opportunity in this district. With gold prices the way they are, people can truck dirt a long way, and with the exceptional grades we have, we know that can be trucked a long way on the yield gun. So there's opportunity from an existing producer point of view, but there's also opportunity for us, because what we want to do is be able to get to a position where we can make a standalone decision about development. Moving on to the next slide. This is the Evolution joint venture. The green areas are 100% Musgrave, including the starlight discovery. And then the yellow and orange areas are the Evolution joint venture. So this is an area on the Salt Lake. It's an 18 million joint venture over 5 years with Australia's 3rd largest gold developer, which is Evolution, obviously. So they're into the 2nd year of this joint venture. Evolution have committed to another $2 million over the next 12 months. We've got a number of targets we're developing on the lake. At the moment, they're early stage, but getting some fantastic results coming through. That for this next financial year has already started. That started earlier this week. And we're looking forward to results flowing from that work as well. Moving on to the next slide. So just putting again what I've been saying in the last few minutes into a context of what we have got going forward. We're doing soil geochem and geophysics on the targets we currently have, which is really those regional targets, prioritising those, getting those ready to drill, which will start in a week. RC drilling and diamond drilling at Starlight. Initial stage, we'll drill back down to about 350 vertical metres, which will build into the resource. And then we'll continue to drill past that to try to build the resource further from that point on. Evolution joint venture, as I've just mentioned, we've got that rig turning on the Salt Lake. You can see the image there of the rig, and that's what the Salt Lake looks like. It's a dry lake, quite easy to get around with track-mounted vehicles. And then the regional air core, as I mentioned, will happen, and that start in a week. That's 100% Musgrave's ground. So really, in conclusion, just moving on to the next slide. So what we're seeing here as we do move to that last slide, we're seeing an existing resource base that we have for the company. We've got new high-grade discoveries. We think we've got the ability to make some more within the belt, because this is the first time we're turning the rigs around to drill in that northeast direction, which can make these new discoveries like Starlight. We think there's a big exploration upside for us there. Obviously, with the new Starlight discovery, we expect to get high margins on that because of the near-surface high-grade nature of the deposit. We've got the Evolution joint venture, so Evolution is partly funding our exploration on the lake. And we're well funded at the moment. We have $9 million in the bank. So we have high grade, we have good infrastructure in the area. MET testing to date has been really good. We've got samples underway, testing now for Starlight as well. We have all the ingredients, we think, for a very profitable development story going forward. And on top of that, the background to all that, we have a really good Aussie gold price and the expectation that that will continue for a period of time. And that'll probably, more than likely, lead to increasing M&A in the gold space globally. So that's it from Musgrave. Thanks. Happy to take some questions.
Thanks, Rob. Some questions about the gold price. Let's start off. You finished on the gold price. What are your thoughts there?
Look, I think everything we're seeing with the way the world is at the moment with COVID, with the macroeconomics as well, with zero interest rates, there are a lot of factors really leading to a strong gold price over a reasonable period of time going forward. So if you look around, there are really no negative influences really at the moment on the gold price. So I'm hoping and expecting to see a pretty strong gold price going forward. I wouldn't want to predict a number on that, Tim, but
No.
but I think the number we have at the moment is pretty good as it is.
I mean, you're in a great position there with, you know, Evolution as a JV partner and things like that. I suppose one of the questions, and the questions coming through in terms of theme, like how do you balance out that cash position and the potential need for more funding as you kind of grow that deposit?
Yeah, no, good question. So obviously, you know, the way the market is, the opportunity for cash, what we're spending at the moment, we're spending roughly around, going forward once we get the fourth rig on site, about $1 million a month. So with that in mind, there's a fair bit of spend, but also that's building towards a, you know, the really strong gold price going forward. We have 9 million in the bank. What we want to do is be able to have enough cash, secure that cash to really be able to drill out. The next phase is for us is really building that resource base. So there'll be a fair bit of drilling going forward, but it's always a question, how do you balance that, Tim? Obviously, we discuss that at the board on a regular basis, and at the moment, we've got no further decisions we've made going forward.
Yeah, sure. And so how long does it take in terms of time frame to get into production?
Obviously, the first stage is the resource. You've got the resource base we need to build. Once you go that, you go through to feasibility. Once feasibility is happening, all your permitting is happening. And at the same time, obviously, then you get through the process of actually being acquiring enough cash to actually develop. So each of those points is a trigger, and you move forward to the next stage. But you know, to summarise, you're really looking at a period of a minimum of 18 months from today before you could ever get to a point of probably producing gold. If you want to do it in a standalone operation, if you want to do it and toll treat it somewhere else and process it in an existing facility, you can shortcut that time frame. But you're still looking probably at 12 months before everything you can do as far as resource and permitting required.
Sure. And the other 17 other possible starlight structures, is there a plan to drill those in the meantime?
Yeah, no, that's what I was mentioning about this. The fourth rig we have turning up on site, hopefully in about a week's time, and that'll start testing on a regional sense what we think might be potential for repetitions within the belt. And there's 18 targets we'll systematically work our way through, again, starting in about a week's time on those new targets.
Great. Okay, that's all we have time for, Rob. Appreciate that. That's a great story. I'm sure a lot of the big boys are watching exactly what you're doing at the moment, given the nature of the gold industry at present.
No worries, always great. Thanks, Tim. Thanks, David.
No problem. So that's all we have time for. We appreciate your involvement every Friday. Please watch out for our ShareCafe survey that we'll be also sending out to you all. We'd appreciate you participate in those surveys. It takes a lot of time to put these webinars together. So if you can help us, we can help you. So see you next week.